respect to the bank holiday anyway. I don't expect that much volatility in the market, which is understood. And we did have quite some volatility during the London session. So most key events are definitely during Tuesday, London session, inflation figures for the pound. So that's going to be something going on there, some volatility there. Then we have the Swiss franc, which rarely gets any news anyway. But then most importantly, on this Wednesday, we have the monetary policy report and the rate hike statement for the Canadian. So leading up to there, we will monitor the Canadian pairs as we get going also. And then they are hinting that they're going to increase their rates. That's already priced in. But like I said, it's news, it's volatility. And then the press conference, most people tend to stay out of it until the aftermath. Then we have a clear direction. And then later on, we have some Aussie employment and unemployment rate change. So forth. So some key news releases, especially for the Chinese news, will also be coming out. And then we're going to finish off the week basically with some U.S. dollar red folders. And then Friday's going to be pretty quiet, pretty calm, some pound retail sales. But anyway, let's get it in gear, guys. Are you ready? Let's go. Make sure you're log on. Make man, what's good? And you're using Google Chrome. All right, so U.S. dollar yen. Now, guys, there's, make sure you got your pen, your pad out, and so forth, because I want you to understand there is a rule that a rule that is implemented when it comes as far as the trend lines. Okay, and we're going to take this trade setup from the top to the bottom. So, okay, here's point one. All right, point one. Then we came. Point two was verified right here by a nice doji followed by a bearish engulfing. So kind of like an evening star setup, right? So now we can all agree that point three has also obviously been validated, right? Point three has been validated right here around this major key level 114. Nice rejection. So point three has been validated. Now here's a rule for you. When there is a third touch, basically a third strike, you can call it a third bounce off a trend line, there is going to be a 70 to 75% chance that we could make a new low. All right, we're going to make a new lower low. All right, that we're going to take out a previous lower low. All right. Okay, so make sure you have that down. Give you a second. Whenever there's a third touch of a trend line, chances are there will be a lower low will be implemented. Okay. All right, excellent. So that was the third touch. Then we managed to pull back down. Remember, do not forget this large picture, this strong bullish pop-up right here, this strong bullish movement. We're on the weekly now. All right, we're in the weekly because if I take it one more step up to the monthly, because you're going to see the trade setup in just a second. We're nearing a very strong area of support. We have a lot of wicks here. So 1110, as I mentioned to you before, from a target that we could definitely make it down onto, and I see us most likely getting there, is a strong area of support because we have a lot of rejections off this level. So the market definitely is exhausted up there. All right. So when I come back down now, I'm down back to the weekly. So I'm going to take a fib. Moving averages have crossed back down also on the weekly. All right. But watch, like I said, study this very, very carefully. This is going to be one of the trade setups that I do like, that I do prefer. So I'm going to take it from swing high to swing low. And we can all agree that the 61% will land right here on this monthly key level, just about close enough to the monthly key level. Now, mind you, there is an ascending trend line here. Point 1, point 2. Wait a minute now. We're looking into point 3 now. All right, this could be definitely a potential point 3, which is landing directly on the 61%. So this entire move is landing directly on the 61% near this major key level. All right. So this is obviously the third point that we're looking at. Now, either we're going to do one or two things. We're going to bounce or break. All right, guys. So either we're going to bounce. Either we're going to bounce off the trend line or we're going to break the trend line. Either bounce or break when we get there. All right, so when I come down to the weekly time frame, I'm coming down to the weekly now. I have a few things that are starting to line up and become evidently clear of what's going on here. Evidently clear of what's going on. So now we can all agree now that this is looking like a very nice ABCD pattern. So the A point starting up here, B, so A to B, C retracement, several rejections off of the C, which is the 61% up here, all right? 61%, and now we have taken out this low, confirming that we're most likely going to hit this target, all right? Now, remind you, we are near some, like I said to you before, we are near some support. We are near some support, so just look in the past so you can see we're nearing some very serious support. We already took a look at it on the weekly time frame, and here goes that trend line meeting right at the 127. So a nice A, B, C, D pattern. Now watch this very carefully, because we're starting to have the ratios lining up. So remember, either bounce or break, 127 is right here. So now I can say, well, okay, this is starting to look like a potential area, obviously, for a reversal. So now we're starting to see, we can say, okay, since we have an A, B, C, D, then we can say X. All right, we can say X. So we're starting to get a nice bullish Gartley starting to form up. Very, very key. So let's watch this potential trade setup. X, A, B retracement, C, take it to the top, D's right here. Now I definitely preferably like the D will probably most likely come down a little further right here. I don't think we're going to just suddenly stop right there. There's still a lot of momentum. Remember the third strike rule. Okay, third strike rule. So the third point. So we could just maybe tap, maybe like, wick on through here. Wick on through there, and then get a rejection or some sort of reversal pattern. Okay, some sort of nice reversal pattern. And then most likely my stop loss will be set at the 41 fib. All right? So when we get here, in fact, when we do, there's still quite a few more pips to sneak out of this thing from the swipe swing. So remember when I said all the time, I said now let's get all the things in conjunction. Whenever there's a break between a key level, 70-75% chance that we'll get to the next level. And we're just about almost, I'll say, 70 to 75% there already. So mind you, you might see this pop up on the scanner real soon, but I really, really, really like this trade setup. So when we get down here, I'm going to be watching, definitely to see if we get some sort of reversal pattern and back on up to the upside, all right? Because we are using that third touch rule. Very, very nice. Quite a few confluences starting to line up. We have a nice little bullish Gartley forming up. I like the ratios. They're coming out real nice. I like it. Looks good. So guys, this will be one of the trade setups that we're going to look very carefully at as we head towards the end of the week. I'm sorry, as we start to play out nice through the end of the week. All right, guys? So we broke it down. We took it from the top-down analysis. I like it. It's looking good. Let's see how that one pans out. All right? So nice new trade setup. Make sure you good doc this. Make sure you have it. What's good, guys? What's good? What's good? Okay, so do you have numbers reversed on your fibs? No, I don't have numbers reversed on my fibs. No, I don't. No, I don't. That's just my regular fib numbers. You're talking about the negative numbers. The negative numbers are usually used as targets. Okay, so from a pullback or retracement, the negative 127 is used as a target. Now, once the 127 is hit, and we get some sort of reversal pattern, then the 4-1 will come. This 4-1 will behave as a stop loss. Initially, like a 50 pip stop loss. It'll behave as such. All right. Okay, so now that is what's going on for the US dollar JPY. I like it, guys. Make sure you have this. Make sure you keep it in line. Don't forget that third touch rule. The third touch, bounce or break. Make sure you read the notes. All right, so that is the US dollar JPY. So we're off of that. I still, like I said, still looking good from when we got up to here, guys. Remember when we got up back on this retracement? So we're still looking good. Still very, very looking good. You was already taken out of this trade anyway, but still looking good. And we can see it evidently clear, nice and easy, nice and clean, even as we come down in the 4-hour time frame. All right? Okay, so guys, 110 is target. Very, very good. We understand now. We good? I know Oren likes to do that, in reverse. Some people like it in reverse, and that's fine. It doesn't really make a difference. It doesn't make a difference, all right? It doesn't make a difference. What I did was we're about to move on to Euro USD right now. What I did was I took the last impulsive move up. This was the impulsive move up, all right? Impulsive. Because remember, this is impulsive correction. Another impulsive up. And then, mind you, is this a correction or not? That's what we will find out in the very near future. Okay? All right. That's what we will find out. So I took it from swing low, swing high. That's how I get 61. All right? So from A, if you want to say A, B, and this is a C retracement, we could be looking at an A, B, C, and then the D obviously would be up there. If you're looking at it in a weekly time frame, the C retracement still lands on a 61%, which is still very good. So from swing low to swing high. Make sense, Jazzy? I know you're pretty smart. Does that make sense? Makes perfect sense, guys? Okay, good. All right, next, Euro USD. Let's move on to the Euro. The Euro. Boy, oh boy, Mr. Impressive. Mr. Impressive. Now, on the weekly, as you already know, we close very bullish. And I mentioned to you this before several times. So now you see that the rules are very, very strict. The rules are very, very true. Okay? Break through one key level, next key level will be met. How much times did I say I speak about 1, 2, 4? How much times in the past have I spoken about 1, 2, 4? I said once we break a major key level, 70-75% chance what will happen? The next one will meet. Okay, now this is on the scanner. All right? This is on the scanner. Wait. I don't know what happened. Hold on, give this thing a second. It's going crazy. There we go. Now, mind you, there is a lot of momentum. I know some of you probably entered right here, but guys, I've taught you how to filter that out. The moving averages have crossed back to the upside, so I taught you how to filter it out. Now, mind you, when I just definitely come to a realization, when you're using this thing, use it in coordinates to how it's supposed to be used. So if you find a pattern on the daily, then it can take several days before the pattern actually plays out. Now, mind you, this is already, pretty close to your stop, about 40 pips away. So let's go break it down. All right? So in the weekly, we had that bullish closure. The moving averages are up on all time frames. Now, like I said, even on the weekly time frame, we still see that that pattern forming up. We still see it. All right? So we don't have any real confluences just to go short just yet. But we can all agree, just like the DXY, that this was an inverse head and shoulder. So left, head, right. We can all agree that that is that. And here goes the neckline. Here goes the neckline. This is the neckline right here. So I took that from there. I don't want to confuse myself. You can say the neckline was right here. Some would argue and say, oh, it's right there. No, the neckline is right here. So if I take it from there, I come on up, we could say the euro has potential to come all the way potentially up here, but definitely 124 is the target. 124 is definitely the target. Now, mind you, this is the daily time frame. Like I said to you before, we did break out of this channel. So we rallied up, pullback. A, B, C, D. Okay, another A, B, C, D again. So I am expecting some sort of pullback or correction on, let's say, the 4-hour time frame. All right, we're taking it nice and easy. 4-hour time frame. 8. Now I'm back down to the 4. So now in a situation like this where the moving averages are up definitely on this time frame, 124 is not too far away. Remember, we discussed this already. And it is possible for us to get back up there. So wait, let me just go back up to the monthly real quick to see, so you can understand where I'm coming from as we're taking it from the top. So we can all agree that we're in this nice regression channel, and price has been respecting this trend line very, very well. So we're almost at the peak of that. But notice 124 is a nice strong barrier. I have to come up here because I need the information. I need that information. So nice support over here. Another nice support. Another nice support. So we're in this region. We're in the region. We're in that region now. So that's why that popped up on the harmonic scanner. And now, bulls are going to be looking to take their profits pretty soon. Really, really, really soon. Now, mind you, that pattern can take a little bit to it can extend. The D leg can extend pretty well. Remember, as I said to you before, that 124 is definitely on the menu. So in the 4-hour time frame, we're still up. There's no reason now to just get out of the trade or continue. No reason to get out. We still have a few. We still got a few more pips where we can get up here. But does the risk to reward make sense? That's what we got to look at next. Does the risk to reward make sense at this point where you're buying where it's so high? All right. Lex, can you please explain where do I read about the rules? I am new, and so forth. We will get to all of those. Yes, IML Academy. Why those EMAs? Why always they use the EMAs? The EMAs always behaves as a filtration system, or it will act as a support and resistance. Now, many people use different EMAs. They use different settings. I find that the 8 and the 18 are comfortable for me because you can see that they will act as support and resistance depending on what direction we're heading in. All right? So, guys, it's still plenty of time left in this day. We are looking pretty bullish. We did take out this previous high. We broke above here. So, like I said, 124 won't be a surprise if we make it up there. So, this still has a little bit of way to go. All right? So remember, it's on the daily time frame, so this is still a valid pattern. Yes, it is. It's still very valid. We're not going to fight this thing. I'm not going to fight it. It's still very valid. Stop is still, quite a little bit of ways. So it's like kind of advising you, do I go long? Do I go short? I kind of sit on my hands. I kind of sit on my hands on this one with the Euro USD. I sit on my hands. All right? Okay, guys, so we've covered that. We've spoken about it, we broke it down, and we've seen what makes sense. Okay, I really like that UJ trade, so just, keep your eyes on that one. All right? So next, someone asked about gold, which is in our list. We're keeping a tight list. Ha, ha, ha. Now, okay. All right. Gold, 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 gold. Boom. Gold, gold, gold. So gold is just like the euro, but find this, look at this, very interesting. Thank you for shedding this here. Now, look at where we are on gold. Look at where we are. This is very, very interesting. Very interesting. Just like the euro, just like the UJ, you can see. All right, remember, guys, we're going to break this down now. Remember our rules, the rules that we just implemented with the trend line rule. All right? This is very good. Oh, man, thank you so much. We got some good opportunity this week. My goodness. If it was any time for the dollar to start kicking in and gain back some life after being dead for so long, it will be this week. So 1 touch, 2 touch, The third touch, we pull back. All right, fourth time is a charm. All right? So we are here near this trend line. Very, very good. Very good. We are near this trend line. Notice, look where the trend line lines up. Right on this weekly at the 13500, which we did mention quite a while ago. If we break one key level, guys, keep the rules intact. We break one key level, 75% chance we'll get that. And we basically filled the wick of this. So, just like the Euro USD, which is forming up for a nice short on the daily, I expect the same thing for gold. I will expect the same for gold because they will move correlatedly because they are anti-dollar crosses. All right? They are anti-dollar crosses. So how do I approach a situation like this? Now, I can also see the nice same XABCD pattern here. It looks very, very same. Much the same. And mind you, we are back to retest 13500, which gave problems in the past. We looked at it in the weekly. We had a third trend line bounce. But remember, from this point, retracement 78%, we have to also still keep this one in mind. All right, but this is definitely about overdue for some pullback. We are up here, so I would say we have to see how the daily closes now. We got to see how these daily candles close. We got to see how the daily candle closes, all right? So when I come down to the 4-hour time frame, notice I'm not going lower than that. What are we starting to do? We're starting to hesitate. We're bouncing right off this trend line a little already. We're bouncing. I'm just going to minimize my chart. I'm minimizing my chart, guys, so you can see what's happening on such a time frame. I don't think I could go smaller than that. It won't allow me, but it's okay. We're up in that region where there is a possibility of a nice potential sell opportunity coming up on gold. All right? Just like it's coming up on the euro, I expect it to be coming up on gold as well. So her dog, you're convinced that 113,600, where you're convinced we're going up there. Man, that's pretty steep. So can you say an inverted head and shoulders? Yes. You can argue that too. You can argue that. Okay, I see you're a patterns guy. And that's too. We can definitely argue that left head, and you can say we can come on down for the right. We can argue that. But what I'm looking at is the weekly trend line as we're discussing. So I am expecting some sort of pullback. Mind you, the market doesn't move in a straight line. We need some sort of pullback in order to go higher. All right. So this trend line is being respected very, very well. So keep that in mind. That's not a good place to buy. This is not a good place, especially right we're here. We're going to be looking for price to give some sort of reversal signal. Because if we do give a reversal signal, then we're going to come right back on down. And guess what now? Now, what do we have here? Let me see how good your eyes are. This is how we're getting the trade setups now, guys. Let me see how good your eyes are. We already discussed the Euro USD for a nice swing trade. We already discussed US dollar JPY for a nice swing trade opportunity. Let me see how good your eyes are now. All right? We can all agree, 0.1, 0.2, what's happening here now? We can all agree to this. Point 1, we have a reversal, 1, 2, 3 point pin bar, 0.2. Give me a second, 1 second. All right, where's my notes? Pull out. Same thing will apply here. Bounce or break. Ugh. Butch Boy, excellent, very good. Yes. Now, mind you, it's a trend line. Evidently, it's going to be violated. It's going to get broken at some point. But guess what? Now we can use the rule. We can use that rule. We can implement that rule. All right? We can implement that rule. Because you can see, as you see exactly what I spoke about. The first touch was up there. Here goes the second touch. Here goes the third touch. And what happened on the third touch? We came back down. So once again, we're in that area. So if now today we close on a doji, and then the following day we get some sort of little bearish push down, then I would be more than confident and more than safe that we can implement a short position here. If, remember what I said, if the following day, this is why it's good not to trade on a Sunday. You just, let the market settle its feet, get down on a Monday, and so forth. So if we get some sort of reversal pattern, then we'll be looking, especially if this previous day's low gets taken out, then we could say, all right, we can potentially ride this thing back down. Stop loss would have to go previously right above this day's high, and then we're looking at a potential retrace back to down here, or we can go back to here, which is obviously a trend line. So we can use the trend line as targets, as support and resistance, all right? If we don't break. Remember, guys, if we don't break. If we don't break. On a shorter time frame, one can argue, Lex, well, can I trade the correction? Yes, you sure can. Why? Because what are we doing? We still rallied up without barely any correction, pullback. We can get a similar pullback this size. That's still similar and suitable enough. This is why when we're at a crucial point in the trend line, it's very crucial that we watch, rather than just get on in and say, oh, just because we're there, we could rally up and break the trend line. But if we don't, and we start to see some bearish impulsive movement, the day will close down, and then now I would be confident that we're going to get to that original plan. See what I'm saying? And that's a good way to analyze this, good way to break it on down. All right, very, very good. So that is gold. All right, so we covered gold, we covered the euro, we covered the US dollar, yen. All right, now the next pair I want to look at now is the first of all, let's find the health. Let's look at the health of the DXY. Let's look at the health. All right, guys, so here, this is the DXY. Here is a longer-term trend line. Now, that's quite a bit of ways for this to get down there, all right? This is on the weekly. That's quite a bit of ways. This is why I'm saying that the DXY it still has some room to come down, especially now that we've taken out this low, all right? This low has been confirmed that the market has made a new low. Now, we are approaching 90. Like I said from last week, we're approaching this area to this area that can act as some serious support. But we're approaching 90. But keep in mind, there is a long-term trend line. First touch, point 1, point 2, that's a very long space from here to there. So, if in fact that DXY does not find some sort of strength, which is kind of obviously looking like that same M pattern. I don't know basically what's going on with that. We're just awfully falling off the face of the earth, and this is largely due to failure to meet certain monetary figures and so forth. And what do I mean by monetary figures? I'm talking about CPI, PPI, also non-farm payroll. We missed a figure or two. So these are all the things that are attributing to that. All right. So just like the US dollar JPY, we're starting to see that nice M pattern form up also. All right. We're starting to see that nice M pattern form up also. Wave 3, 4. This is taken out. Usually the 5 doesn't go that much further past this. And mind you, this is showing up as a gap. I don't know why it's showing up as a gap. But still way too much bearish momentum still on this. This is why we have to wait it out or continuously ride the Euro USD up until that desired TP up there. Or the US dollar yen to that desired bottom down here. Or gold to most likely that desired area right here. Just like the DXY falls in line with this. We're already doing that. Okama 1, we're already doing that. We're already doing that. So yeah, already doing that. Very good, already doing that. Just always keep in mind your risk to reward. So yes, so back to what I was saying. So now, like I said, very much bullish pressure still going. Bearish pressure. EMAs are down on multiple time frames. So I took it from the monthly. EMAs crossed down here. Retests. Weekly we're down. So on several time frames, we confirm that the EMAs are down. All right. The only quickest or earliest time frame that I consider any sort of reversal would be the 4-hour. And we're getting pretty close to that 90 point. That 90. 10% underperforming the majors. All right. With that harmonic starting to form up very nicely. X, A, B, C, and the D pattern right there can be overextended. So this is basically the state or the health of the US dollar. And as this pattern is forming up, then obviously what would be the targets moving forward? You would have this counter trend line 1 first point. This is the inner trend line. 1 touch, first point, second point. We get up here will be a third point, and then here's the outer one. First point, second point. You see where I'm going with this now. All right, guys? So on the way back up, they will behave as targets. Third point, would have to see if we clear that. We have to clear this. So the US dollar has to gain some serious traction in order for these trades on the scanner, on the this great, nice, beautiful harmonic scanner, to gain back for these trades to go into effect. We need the US dollar to gain some serious traction. All right, there needs to be some serious momentum shift in order for these trades to be valid. Because if there isn't, they're not going to be valid trades. All right. So we basically covered the US dollar today. Excellent. Beautiful. Excellent. Okay. All right. Next. So guys, we're done with the US dollar. Safe to say we're finished. We're done with the US dollar today. We've covered that. Excellent, guys. Beautiful. Mind you, there's going to be some good trades coming up. I like it. Okay, the pound yen. Now, I actually put up a post on IG about that. See that rule again, guys? Weekly. There goes that rule. There goes that rule. 0.1, 0.2. What happened? 0.3. Rejection off the EMA. We can all agree on that, right? Now, mind you, we're still here at 152. 152 is still obviously being a problematic area. Now, I think this is a swipe trade for you guys, if I'm correct. This is a swipe trade for you guys. What? No way. Hell no. You sure? Nah, there's no way. Nah. Okay. All right. Cool. It is what it is. No problem. It is what it is. So, okay. Anyway, all right. Let's take it from the top. Let's take it from the top. So, I mean, I can see the reasoning for it. The EMAs have crossed on the monthly. Yes, we have. Okay. So we crossed on the monthly. Weekly, we're up also. We never crossed. Third touch. Realistically, the entry was down there. But anyway. So daily, when I come to the daily now, we can see that 1, 2, 3. So all right, here would be a trade setup now, a nice trade setup. This is why it's very crucial. I like to wait, especially on a Monday, for a daily close to see if I can get some more information. Let the market settle its feet, because if we close on a doji here, all right, so we close on a doji, indecisive candle. Basically, there was no the session low, session high. There was no clear direction between bears or bulls of what's going on here. Then we could be looking at a nice evening star setup, actually, to go short off of this line. And the stop loss obviously would have to go above the previous high of this candle. All right? And we're looking most likely to retest this trend line again. Now, due to the stance on the daily, we're still in this consolidation zone. All right, so from the 4-hour, there was no real clear break. There was no real clear break, guys. This is how I'm looking at this bad boy. There is no real clear close. We did not close. We managed to push up, but guys, the close is so important. I don't care if it wicked. The close is important. I need the close outside the box to confirm the next target. I need the close. I need the close. Well, yeah, thank God it wasn't very large. All right, so guys, there's no decision yet. All right, there's no decision. We're consolidating. There's no trade here. We're consolidating. There's no close. There's no close. This is where we close. We wicked quite a few times. I'm going to put it right here on this area. We managed to wick, and look what's going on. I believe this was on the 15-minute scanner a little early on today. All right, but there's no real break. There's no real direction here. We did manage to bounce off the EMA. This was already given, so I'm not going to take credit for it or anything like that. I believe it was on the 15-minute scanner. It was there. I saw it earlier today. Now, guys, when these things happen, you got to react quick. You got to react real quick. See, you got to make a decision or not. Now, it already came back down for about 50-something pips, just about. But why would that have been a good trade? Because we're near a key level, guys. We have not broken this key level. So until we break and close above on, like, let's say the 4-hour to the daily time frame, until we close above, then I can say, all right, I'm safe to initiate my buy. This will be my first TP and my second TP. All right, so once we get the close above here, this is the trade as follows. The close outside the box, then I would be comfortable enough, close on the 4-hour, comfortable enough to say, all right, I'm ready to go long. I can be comfortable enough. I can reduce my risk very small. Reduce my risk because I'm trading off a key level. I'm looking good. I get the close above. Outside that consolidation zone, I can minimize my risk like hell. Most people can keep the risk right there outside of the box. But once I get a close, I keep the risk like about 30 to 35 pips off of the weekly key level. That's already definitely a good, I'm looking at a 3-to-1, and then eventually, if we take out that high, then we can go there. I'm not saying, obviously, the first swipe wasn't good. It was good, but we officially didn't get the close. We didn't get the close outside of the consolidation box. We did not get the close. If we closed out of here, oh, man, this thing was going to take off and go. but we didn't get the close. See why, guys? This close is important. Close, close, close is important. Matter of fact, let me give you a little extra. Let me give you a little extra. Not just yet. Let me give you a little extra. Oops. We didn't even hit a 38 retracement. We didn't even hit a 38. Not even a 38. This is like 23. I don't look at the 23. That doesn't count for me. I go as little as 38. We didn't even hit a 38% retracement yet. We didn't even hit a 38. 61's right here, 50 there. We didn't even have a fib retracement yet. Swing high, swing low. We didn't even have a fib retracement. Always, guys, use the wicks. I get a lot of questions about that. Use the wicks. Don't use there. Use the wicks of the candle. Where did the candle wick? To here and here. Use the wick. So WGS. Don't come up in here and start trouble, man. Don't come up in here. Wait, let me go back. Does something make sense? So guys, exactly. We have some good trades. What's the relevance of 127? Okay, that's very good. I'll show you. So guys, wait. Hold on. That's a general question. That's a very good question. Does everyone understand the relevance of the negative 127 Fibonacci ratio? Because Jordan, how do you pronounce your name? Jordan Minute? I'm sorry, boss. Does everyone understand the relevance of that? Thanks for your name, boy. Jordan Emmett. I'm sorry. Really? Okay. All right. Okay. So a lot of you don't. You sure? So, all right. Okay. That's a lot of no's. That's a lot of no's. Okay. Very well. I need to give a very nice example. I'm going to use, what's a good one? All right. Yeah, let's use Euro USD. Now remember, the whole time when we was following Euro USD, right? From Euro USD was right here. Okay. let's put this. All right. So, well, hopefully you all know what a Fibonacci is. Make sure you're going back to your back office in IML Academy. All right. So for the longest, you know, you can ask WGS and a few other folks. Okay. They have a lot of my screenshots, markups, and so forth. So, okay, so from this point right here, 127. We're talking about the 127 and how we're going to use the 127 as a target really well. And then after this really explanation, I'm going to go lastly and give out basically one more trade to look out for. So from this swing low to this swing high this is your A point right here, your starting point. This is your A. All right. So from here, low is your A. And this can be, say, your starting point X, a high, X. Your next point, A. Right? So from X to A to B is technically a fib retracement. All right? So that usually can consist of about 61 and up. All right? 61 and up. Well, we're talking about the A, B, C, D. I'm not too concerned about the X. I'm talking about A, B, C, D. So from here, A. The next point is a high. How do we know that this is confirmed? This was confirmed because we have a reversal. 1, 2, 3. Reversal. Then comes B. Then the retracement is a C. The C retracement is also from A to B to C will usually be a Fibonacci of a 61, 50, 78. Then the D is where the 127 comes into play. The 127 will behave usually as a target. All right? Because what happens? We rallied up. We took out this previous low. New high confirmed. Pull back. New higher low confirmed. Reversal. So we usually just let the trade run and see if we are right. And there will be 70 to 75% chance the 127 will be hit, which is obviously the target. It will always be 127, especially if we are in a rally. We are in a rally cycle, so the target 127 negative fib extension. This is 127% of this entire movement. So from this A point is basically 127%. So this pullback is 127%. All right, so it's used as a target. I could just, pull up a blank screen really quick. I like this because I like it a lot. It's very simple to follow. It keeps me in line. It keeps us, just very simple track on what to follow. And if I just take the fib, I can say from here to there, most likely it can fall in between, here, hold on, sorry, remove, it can be there, mind you guys, I love this because this is how we can utilize the trades in conjunction with all the other rules, especially if we line up on a fib. And then we can say that B's there. 127 will be obviously D. And then we can bounce off either 38, 61. We can even come down as far as 78. And also, the steeper the retracement, the stronger the breakout, or the longer the consolidation. That is still valid. Any one of these those fib ratios can still be valid. So any one of these from this original pullback can be a C. C could be here, C could be there. It could be any one of these. So hopefully you now understand what we're doing. So when you see me pull something up, you now see me doing that. Yes, you can. Yes, you can. Yes, you can. WGS, why are you so nosy, man? That is not for that. That's not for that. That's for when if we get a reversal at the 127, 41 becomes a stop loss. All right, that becomes a stop loss. That will become a stop loss. So as this is the same system that we're going to use to implement our trades, that will become a stop loss. So if we get a reversal at 127, that will become a stop loss. That's what that's for. All right. So nosy. Anyway, guys. Okay. Yes. Next. Pound US dollar. We're done with that. Pound US dollar. Thank you. Hopefully, you guys gained a lot from that. Just like Euro USD, they're all basically falling in the same principle. The pound US dollar, you see the pattern on all of them. X, A, B, C, D. Now, mind you, you see in the pattern on all the US dollar pairs. So what we need now, if we get the closure here, we get the closure above here, then I'm definitely putting 1400 into play. I'm putting 1400 into play. I'm putting 1400 into play. But remember, this is also considered a false break of this trend line because we came back in. So for, one touch, then we false break. So if we close above here, then I'm definitely considered 140 back into play. So on a 4-hour time frame, we gotta watch, because if this closes on the doji, that's gonna be pretty, that's gonna be pretty significant. So we could expect some sort of rally back to go higher again, or an all full out reversal. All right. So the 4-hour time frame, because I'm so high and I'm at a weekly level, I'm very cautious when I'm at the weekly levels. I get entries. You got the entry off a weekly here. Nice A, B, C, D. So when I'm back up to here now, this can be a false break, and then we'll have to just monitor it throughout the day. Remember, this is a bank day, and see if we get some sort of pullback, because if we don't get a pullback and then we just continue to rally up, then it'll obviously be safe to take the long position, and then the target will definitely be, TP will be 124. So TP will be 124. That's the next level. Peanuts, that's the next level. 1, 2, 1, 4. I cannot read this. You don't see that? It's right there. 1, 2, 4, 4. That is our next key level. 1, 2, 4, 4. 1, 2, 4. But if we're insinuating that, then we all know what will happen with the Euro USD, the dollar index, and so forth. Because they're basically all moving in the same direction. Alright, guys. So guys, it's been a wonderful day. We have actually 2 to 3 trade alerts that we're looking out for. We're going to monitor them very, very well. Very nice, clean, organized, very well in-depth, nice, clean way to look at the charts. And just we'll give it chance, we'll give it time, let the trade breathe, and so forth. We went over the rules of the trend line rules. We went over the Fibonacci, ABCD. So now we can just you can implement them into your trading if you choose to. I always say no trading style superior, just to how well of an extent you understand. All right, and like I said, day by day we'll get better and better and better at looking at these trade setups till they become just about crystal clear, and we have what we're looking for, and we trade what we see, not some sort of imagination in our heads, and we can adjust the proper risk according to our account size and so forth. Yes, very good, excellent. What is that? Los 3, yeah. We went over GJ already. We also did that too. All right, guys, very good. Go catch the second half. Much love.